From Bloomberg World Headquarters in New York to our TV and radio audiences worldwide, I'm David Weston. Welcome to Balance of Power, where the world of politics meets the world of business. We want to start with a check on the markets, as always. Joining us now is Bloomberg's Abigail Doolittle. So I think small and mixed were the way you called the move so far, Abigail.
That is correct, David, because we do have small mixed moves at this point. And it's really interesting because, of course, today is the very positive development of the COVID-19 vaccine starting to be distributed in the UK. And on this, we don't have a huge rally. We, of course, had a rally on the news of the efficacy around these vaccines. But right now, we're looking at the S&P 500 up a little bit more than 0.1%. Pfizer, their vaccine, of course, in play here first. That stock is up 2.8%, so a healthy rally there. On the other hand, you have the tech-heavy NASDAQ and the FANG index. Both of those indexes are down. So in a way, there is a move toward the cyclical rally. That is healthy over the long term. But again, interesting that we have this rally pause. And what we also have is a rally for bonds. Bonds up for a second day in a row. So some investors, traders are hedging around the uncertainty of the current environment, still wanting some sort of a haven at play. But, David, there is one sector that is certainly soaring on the vaccine distribution and the vaccine news and the optimism that it will really bring some sort of a big recovery in the second half of next year, normalcy. And these are the airline and cruise line stocks, basically travel and leisure, so beaten down on the year, at one point down more than 80%. But over the last month, we have the likes of American Airlines up more than 50%, United up more than 40%, Carnival, if you can believe it, David, up more than 70% over the last month alone. All of that on the hope that the vaccine is really going to bring quite a recovery next year, David.
Something we're all hoping for, no question about it. Thank you so much to Bloomberg's Abigail Doolittle for that report on the markets. Well, talking about hope, there's hope for another stimulus round, but they've been put on hold, those hopes, again, as Senate Majority Leader Mitch McConnell is resisting going beyond his own more narrow plan, despite Democrats having cut their proposal rather dramatically. To take us through the bid and the ask, we welcome now Henrietta Treyz. She is Veda Partners, Director of Economic Policy. So, Henrietta, I have to say, when I left on Friday for the weekend, I thought this was a matter of moments, hours, something like that. And now we're 4 days later, and Mitch McConnell, he's not sure he wants to do something.
Yeah, I mean, things in DC never get done until the absolute 11th hour. And when you look at the calendar and you see that they had scheduled a recess about 2 weeks before the holiday and they could have bought themselves another week of time, that's basically what they're doing. So we'll be here next week. We will be having the same conversations over state and local aid, transit aid, business liabilities and those components. But I am optimistic now with about 70% odds that we will see a stimulus in the fourth quarter.
So, Henry, give us a sense of the deadline. I also thought that it was the 11th that they were talking about to refund the government. But now it appears they're going to extend that. They're going to vote maybe tomorrow?
Right. The House and the Senate, I think, are pretty close to an agreement on kicking the can effectively into next week. We have two big issues. We have the omnibus appropriations package that just keeps the federal government open. That is a $1.4 trillion prospect. So everybody gets a little gun shy and sticker shock when they see that. So they need some more time there. And then obviously the stimulus talks still need to play out. Complicating that is obviously the president and his continued maneuvers to see what he can do about the November 3rd election outcome. And that really has thrown a wrench in their gears and necessitated another week's worth of work in D.C.
So, Henry, help me on the numbers just a little bit. We hear about the $908 billion, which is that proposal from some Republicans and some Democrats in the Senate. At the same time, how much of that is new money? How much of this is repurposing money that's already been set aside?
I think the best thing to do is really to start from a base case of at least $300 billion of whatever the overall size of the package is going to be effectively recycled funds. So this is funding that last in August for the Treasury's PPP program, some of the ESF programs between the Fed and the Treasury. It's going to be at least $300 billion in money that has already been authorized, and we're just changing some dates around. So my expectation at the end of this process is that we get somewhere in the realm of $300 to $400 billion in new, genuinely fresh stimulus in the next 2 weeks as they debate. But 300 is going to be recycled funds that they've already authorized.
The report on the Bloomberg this morning when I came in said that a big issue for Mitch McConnell was a combination of assistance to the states. He said we don't want to bail out what he thinks of as profligate blue states on the one hand, and on the other, limitations on liability. He's been insisting on that. Are these real sticking points? Can they get past those?
This is not the nicest thing I've ever said, but I'm just going to say it. I think that business liability and state and local aid are really more like canaries in a coal mine. They are cover for avoiding passing legislation if they don't want to. If the sticker shock really does get too hard, 908 billion is 300 or 400 billion dollars more than Republicans have been able to vote for since July. So if I think the real problem is the overall spending, and then you're able to mask that fear of sticker shock with these conversations about business liability and state and local aid. I think there are ways around it. Democrats are willing to work on business liability. They're probably not willing to go for 5 years of business liability, but you can get a couple months well into 2021 covered and work on those problems in the future. And then on the state and local aid part, I hear that from every Republican senator that I speak with. You don't have support from Midwestern Republican states to bail out, as they say, blue states. Unfunded pension problems exist in Kentucky and every other red state as well, but they've really stressed this red-blue state divide, largely driven by the narrative coming from the top, from President Trump as well. So I think those two issues are masking the broader problem of, do we provide government finance deficit increasing stimulus when we know there's a vaccine on the way, when we have this sticker shock opposition post passage of the CARES Act.
Henrietta, I was going to ask you, what are the
So they're
likelihood
real
that
issues, but not nearly as big as they.
I got you. So I was going to ask you what happens in the new Congress. Will there be more stimulus? But I think in order to answer that question, we have to talk about Georgia. What's going on in Georgia?
In Georgia, we have an extraordinarily tight race. I know people are gun shy about the polling, but it has been very good in the state of Georgia. And right now, both Purdue and Loeffler are behind in the polls. Loeffler by a considerable amount that is outside the margin of error. When we look and speak with the Republican campaign operatives in Georgia, one of the biggest concerns they have is this growing fear that Republican voters will boycott the election. That could be anywhere between 5 and 7% of the Republican voter base, and that is outside of the margin of error that they can afford. So my base case assumption is that both Republicans retain their seats in the Senate, but that boycott threat is very real and causing them to campaign and to overhaul. They've spent $300 million already in the state, and there's expectations for $500 million more, if you can believe it.
Okay, Henrietta, really great to have you with us. Thank you so much. That's Henrietta Treyz of Veda Partners. Coming up, how the least fortunate among us are dealing with the growing COVID crisis with Nicole Lamoureux of the National Association of Free and Charitable Clinics. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. The Food and Drug Administration staff reported today that the Pfizer and BioNTech COVID-19 vaccine is highly effective and there are no safety concerns preventing its emergency use authorization. For how this all fits into the overall process of getting this vaccine to us all, we welcome now Bloomberg health reporter Michelle Cortez. Michelle, thanks so much for being here. You can take us through the steps. What happens next?
So what we received today is a 92-page document that outlines the details of the Pfizer-BioNTech study results as prepared by the FDA staff. What this group normally does is they drill down and they look for anything that's problematic, that's worrisome, that they need their advisors to look at closely in the advisory committee hearing that's going to be happening on Thursday. So normally we see concerns in these documents. They say things like, this is something that we're worried about. We're not sure if there's going to be a safety issue or in this group of people, or these are side effects we've seen. Honestly, this is one of the cleanest reports that I've ever seen from the FDA. And it's really kind of shocking when you think about the pace of the development process that we've seen here. What they're showing is that there's about a 95% efficacy level for the vaccine, which we did know. It's a range of as much as almost 98% is the outside positive range for how much efficacy we could be getting here. Also, almost no side effects that we're seeing that are serious. Now, we are seeing a large number of regular side effects, pain at the injection site, fever, headache, that kind of thing. It's interesting that we're seeing those more often in older people who are age 56 and older than in the younger patient population. So that's interesting to know that this might be even more safe and less difficult for older people to be getting. We're also seeing other details like what happens if you only get one shot, how many other people had really unexpected side effects. So it's looking really good at this point. The advisory committee hearing is going to meet on Thursday, and we expect that the FDA is going to take action within days, perhaps within hours after the advisory committee makes its recommendation of whether this should be available or
Well,
not.
that all sounds like it's almost a done deal. Am I reading too much into it?
You know, I honestly don't see anything problematic in this report, but, you know, certainly they have an advisory panel of experts, more than a dozen of them coming together. They've been given a much more robust set of data than what we have here. So if there is something to be found, these folks are going to be finding it. At this point, it really doesn't look like anything that's terribly concerning with the Pfizer vaccine, which is, you know, as you say, it's surprising. Normally, it doesn't go this quickly. Of course, we did get some results from AstraZeneca today. There were some issues there. So we know that issues do come up. So far, we're not seeing them with Pfizer.
But still, the Pfizer name sounds awfully good. Thank you so much to Bloomberg's Michelle Cortez. The coronavirus pandemic has hit hardest those often with the least resources, including, for example, medical insurance. We welcome now someone whose organization is dedicated to providing health care services to that part of the population. Nicole Lamoureux is CEO of the National Association of Free and Charitable Clinics, which maintains 1,400 clinics and pharmacies around the country, all supported by private contributions and grants. So, Michelle, thank you so much for being with us here. Nicole, but give us a sense of what's going on the ground in your 1,400 clinics right now.
Well, I think what we're hearing across our clinics and what we're hearing from healthcare providers everywhere is that they're tired. There is a sense of we need to really focus on wearing our masks and social distancing because our providers are getting exhausted, especially on the frontline providers at America's free and charitable clinics. You know, after the ACA was passed, most people thought there would be no more need for free and charitable clinics across the country, and nothing could be farther from the truth. Pre-COVID, there were 28 million people without access to health insurance. Now, during COVID, there are 31 million people without access to health insurance. Our clinics are seeing an increase in demand, more people needing help, especially those that are losing their jobs and losing their insurance. And we receive no federal funding. So we're looking at people to donate their time as well as some funds to us so we can make sure that people are healthy, because we also have to make sure we keep diabetes and hypertension under control so those patients aren't going to already crowded hospital.
Nicole, just for background here, that 28 million going up to 31 million, as I understand it, is still lower than what it was before the Affordable Care Act. Is that correct?
That's true. Before the Affordable Care Act, there was 50 million people. But I think that people thought that the ACA was this silver bullet and it was going to fix everything for everyone. But rather, it was a first step for some people. And there needs to be a lot more work done in order to make sure that those who are working poor, people who are working every day, our waitresses, our waiters, the people who are delivering our groceries, have access to health care. Because we're just we're a stopgap at free and charitable clinics. There's no way we can take care of every single uninsured person in America. Though I will say during COVID, it sure has felt that we've tried, because when we're looking at transitioning to something like telehealth, 67% of our clinics transitioned on a dime to make sure that there were telehealth issues. But as the next administration is looking at a public option, we really need some bigger conversations. It cannot just be a health insurance card in someone's pocket. We need to have the free and charitable clinics at the table. We haven't been at the table before with other administrations, and we're really hoping that this administration will bring us to the table, because when we're talking about health insurance, we have to talk about health care, making sure people have access to transportation, access to broadband, so that they can talk to their doctors and get the care that they need.
Well, I want to talk about the new administration coming in, but before we get to that, give us a sense for the people who do not have health insurance and cannot afford to go to a regular place. What do they do if they don't have one of your clinics? What's the alternative?
The alternative to not coming to one of our free clinics is either they go to an already crowded emergency department, or frankly, they just forego care altogether. And foregoing care altogether is not something that we need in this country, because the more people who forget or don't take care of their diabetes are more people who go into diabetic shock, and then our death rate will continue to climb. And I know that sounds emergency-like for so many people and they can't believe it, but by the grace of God go I. Prior to COVID, many of us took our health for granted. And now after COVID, so many people are losing their job and their insurance that it's overwhelming our clinics. 74% of our clinics are reporting an increase in patients that need help.
So let's go back to the administration coming in. You referred to earlier, Nicole, and what you make of it. We're going to have, I believe, a formal rollout by the President-elect Biden later on this afternoon, introducing people. We know who they're going to be, led by Mr. Becerra, the Attorney General from the state of California. What do you make of this team, and particularly Becerra, because he was quite active in the Congress, as I understand it, on the Affordable Care Act?
Absolutely. Well, I think that many of us in the medical community were hoping for an active practitioner to be in this role. But Mr. Becerra has been defending the ACA before the Supreme Court, and he's also going to be the first Hispanic in this position. So we know that he has a real interest in those health disparities I talked about before, transportation and food. And we think that this is very important. We also think that his role is critically important because we know that Black and brown people are dying at a faster rate due to COVID. And we know that there will be a real focus on this issue under his leadership and under the Biden team.
So it's fair to say, I will venture a guess here, that this new administration is not going to be trying to repeal the Affordable Care Act the way the President Trump's administration was trying to do. But what can they do, if anything, to expand it? And particularly if they don't have control of the Senate?
Well, I think the first thing that they have to do before anything else is we have to get COVID under control. And we really have to focus on how we're going to roll out the vaccines that people are going to be receiving. Free and charitable clinics are not in many of the governor's plans across the country as places that can give those vaccines. So that's the first thing that we will be talking to the Biden administration about, is making sure that free and charitable clinics have access to those vaccines and those PPEs so we can get those medically underserved populations vaccinated as fast as possible. And then I think there are things that can be done. We can protect pre-existing conditions. I know that the president-elect has talked about expanding Medicaid waivers or enhancing the eligibility for Medicaid. I think those are all things that can be done, but it will be very tricky to pass a public option if the Senate Republicans retain control.
Nicole, you mentioned that you don't get federal support in terms of funding. Give us a sense of where your funding does come from. Where do you get it from? As I understand it, it's individual contributions and grants.
Absolutely. It's individual contributions, people who want to help the work of free and charitable clinics in their communities, or they've seen us somewhere else talk about the great work that we're doing. And then private corporations. CVS Health has been a huge supporter of the work that we've done, especially on social disparities. Direct Relief International has been another partner for us. We've tried to partner with people who want to make sure that we're building healthy communities across the United States of America.
Okay, Nicole, really a pleasure to have you with us. It's really important subjects. That's Nicole Lamoureux. She is CEO of the National Association of Free and Charitable Clinics. And we turn now to Mark Crumpton for Bloomberg First Word News.
David, thank you. U.S. officials say they will have enough COVID-19 vaccine doses to let most Americans get inoculated by next summer. The Trump administration is downplaying reports that it passed up a chance to secure more of Pfizer's shot. The government signed a deal last summer to obtain 100 million doses of Pfizer's experimental vaccine, enough for 50 million people. The United States also has agreements in place with Moderna, AstraZeneca, Johnson & Johnson, and others. But only the shots made by Pfizer and Moderna are likely to be cleared by the FDA this month. A 90-year-old woman was first in line today when the UK became the first country in the West to offer coronavirus vaccinations. The National Health Service calls it its biggest immunization campaign ever. Prime Minister Boris Johnson warns that mass vaccination will take time. In India, health experts are baffled by a mysterious illness that has killed one person and sickened more than 500. Officials say the illness was first detected Saturday in the ancient city of Eluru. Different theories are being tested. The most recent one is contamination of food by pesticides, but nobody knows for sure, and there doesn't seem to be any common link among the hundreds who have fallen ill. Texas Attorney General Ken Paxton is hoping to take the election fight to the U.S. Supreme Court. Paxton, an outspoken advocate of President Trump's, says he's suing Georgia, Michigan, Pennsylvania, and Wisconsin. He's accusing the swing states of exploiting the coronavirus pandemic to sidestep federal and state election laws and pass last-minute changes to mail-in voting. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks so much, Mark. Still ahead, it's time for our Stock of the Hour. Tesla seizes on its rally this year. The electric car maker says it is going to raise $5 billion by issuing more of its common stock. We'll look at Elon Musk's latest move. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. Tesla's shares have been surging this year, and now the electric car company is starting a program to sell up to $5 billion of new shares of its common stock. It's our stock of the hour, and Bloomberg's Emma Chandra is here with the story. Emma?
Thank you, David. Tesla in the red today, but today's story really all about that big surge we've seen in Tesla stock through this year, up some 650% in 2020. And so Elon Musk, unsurprisingly, perhaps taking the opportunity to feed investors' appetite for Tesla stock. He is returning to capital markets for the third time this year. That's right, the third time. This time expecting to raise around $5 billion, which would bring 2020's cash haul from equity markets to some $12 billion, bringing their cash balance to a total of $20 billion. And what's he going to do with all that cash? Well, it's there to support Tesla's capital spending. We know CapEx at Tesla expected to double each year for the next 2 years. China really the growth engine for Tesla. They're looking to expand that factory they have over in Shanghai, but they're also building 2 new factories, David. One in just outside Berlin in Germany, and another in Austin, Texas. And this expansion of Tesla, of course, all coming through the course of this year. Remember, around this time last year, David, we were talking about Tesla becoming profitable. It had just had its first quarter of profits. We're now looking like we're heading towards a 6th consecutive quarter of profitability for Tesla, and all this on the back of changes and expansions and growth in battery technology, the addition of a crossover SUV, and the fact, of course, that we're going to see Tesla join the S&P 500 very soon. And what's interesting about Tesla joining the S&P 500, David, is that it will be the 6th largest company in the S&P 500. Its market cap some $600 billion. Its cash haul more than 88% of the S&P 500. And so Elon Musk also not doing too badly, one of the biggest wealth gainers this year.
Yeah, it's fascinating. I mean, it's not just going to be in the S&P 500, it's going to help drive the S&P 500, so to speak. It's really quite extraordinary for a new company. Thank you so much to Bloomberg's Emma Chandra for that report on Tesla and its plan to come up with another $5 billion in cash by selling some common stock. Still to come, stimulus, vaccines, and the outlook for 2021. We're going to get the view from former House Majority Leader Eric Cantor. He is now with Moelis & Company and joins us next to talk about Washington and the business community. This is Balance of Power on Bloomberg Television and on radio. This is Balance of Power on Bloomberg Television and radio. I'm David Weston. News of a COVID vaccine holds out the hope of recovery sometime next year, but we have to get there first. With cases on the rise and government stimulus about to fade, we welcome now someone who has seen both government and business from the very top. Eric Cantor served as the House Majority Leader when he was a Republican congressman from the state of Virginia, Commonwealth of Virginia, I should say, Eric. And he is now Vice Chairman of Moelis & Company. My old boss, Justice Powell, would not like it if I called it a state. Thanks so much for being back with us. Great to have you with us. So give us a
real pleasure.
Give us a sense of what's going on right now in Washington. I mean, you know your way around those corridors of power pretty well. We thought we were going to have a compromise, a bipartisan compromise coming out of the Senate on stimulus, and now it appears the Majority Leader is balking.
Well, I think, first of all, David, we're in a very unusual time post-election where we've got, an incumbent president who lost the election, but really has waged a campaign to counter that narrative and has raised unprecedented sums after he lost the election. And so that does loom over what goes on in Washington. I think many people are very focused to see where things head in 2021, how we leave 2020 behind us. But let's not forget, President Trump is a mighty force on the Republican side. There are a lot of voters, obviously with 74 million votes in the United States having been cast for President Trump. He'll continue to have a lot of influence on what goes on. And I think that's really the unanswered question. But as we sort of look to right now in the stimulus discussions, there's no question in my mind that the pressure to pass pandemic relief is increasing as we see the cases and the hospitalizations surge across America. But Mitch McConnell is always a consistent individual. And ever since the spring, when he said the next round will have to start with liability protection for businesses, that's what's going on right now. And whether it's state aid to localities or whatever else the issue may be, Mitch McConnell's trying to come true to what he said he wants, which is in order to get the economy back to full growth mode, we need protection for the businesses so they can open up, welcoming customers, follow the protocols so that everyone can be safe without the fear of this, outrageous sort of litigation that sometimes unfolds in our country.
Well, I'm curious about that because certainly that is the reporting that the majority leader on the Senate side, Mitch McConnell, is really balking. He says we have to have that protection for liability for opening back up. At the same time, is there a sense there are businesses who are not opening up because of liability? My sense is that it's exactly the reverse. Businesses are insisting they get to open back up again. Is it really deterring the economy?
Well, I do think that there are many lawsuits that have already been filed. And, in our industry, and I say this as a lawyer, in our country, we have a very industrious industry in terms of the plaintiff's bar. And there can be plenty of opportunity to, I think, form a narrative, and access to the court systems should be open to everyone. And that is the case. And to stave off increased costs for businesses as they encounter opening again. It has been always Mitch McConnell and the Republican position to make sure that those protections are in place so we can see businesses begin to thrive again. And I say this all the while assuming that we require certain things that businesses follow in terms of protocols for protection for their customers. And to see that happen. But in the most part, as you know, the employer-employee situation, that relationship's usually governed by workman's comp. And so that wouldn't necessarily be as large of an issue in this liability protection as would be just a regular business or restaurant owner, a small business, retail or service provider who could be vulnerable to liability claims and maybe frivolous ones at that.
Do we get a deal in the end, in your judgment?
Yeah, I think so. I think, with an extension and the continued resolution until next Friday, we're going to continue to see wrangling occur. And, a lot of it, as my earlier comments said, a lot of it will depend on what President Trump does. And it's interesting to see that Bernie Sanders on the left, Josh Hawley on my side of the aisle, both of them have come together to say, hey, we want to see $1,200 checks cut to people in the midst of this pandemic. Well, again, remember, these checks aren't necessarily targeted in any way. It's pretty striking to me that you have Republican support continuing for that kind of measure, because in many instances, these checks are going to people who haven't even lost their jobs. So I think that is in the spirit of where we're heading. I think President Trump's always been supportive of checks being cut to people. So if he gets on board with that, I do think that you're going to see some resolution by the end of next week.
So it's interesting. Did the CARES Act work in your judgment? I mean, because whenever you're pumping that kind of money into the economy, there's going to be some mistake, some wastage, some people who didn't need it who get it nonetheless, but you're doing it to save the economy. I know Moelis was involved in part of the distribution, particularly on the transportation side. From your viewpoint, from the inside, did it work?
Well, setting any kind of work, the Moelis and company that we do for clients, I can't speak about that, but I will say that just the program overall was meant to try and be a bridge, in essence, a bridge for small businesses and employers to bridge the gap where the government stepped in and required shutdowns, required closings, so that individual business owners could make it through. And especially under the PPP program, that was very effective in the beginning. The problem has been that these shutdowns and now these intermittent shutdowns and hotspot closings, that's now wreaking havoc again. And if you've seen lately, David, the news out of the small business sector in this country is horrific. A drastic portion of these businesses see their revenues now have declined. 3 times as many small businesses are laying off people than they are hiring people. And 25% of the small businesses across the country are cutting back hours. This is a signal to say that maybe some of that money that came out of the CARES Act went for good reason, but now you have these very same businesses that were beneficiaries of that money now being threatened as if their entire existence is may collapse again. So in a way, yes, it was effective to bridge, but the fact is the bridge has been so It's been nowhere near as long as what the situation is required. And frankly, I've always been one to say there's no amount of government money that's going to substitute for the reopening of our economy.
We are having a transition here. Some of what President Trump says to the contrary notwithstanding, it appears we're going to have a different president come January 20th. What do you think about how that transition is working? Is it working from your point of view? Again, knowing Washington so terribly well.
Well, it had a little bit of a bumpy start to begin with. And as you know, the Trump administration and Trump himself stepped back and allowed for the specific process of the transition to occur, meaning the hundreds of people on the Biden team allowed access now to all the agencies to understand where things were so that they could be ready to assume office upon inauguration. And I do think that is working. Certainly there's a lot of noise around it. As I indicated earlier, all kinds of reporting being done. Who knows, again, what's news, what's fake news about President Trump and what he will and won't do in terms of the peaceful transition of power. But I have big faith in our country, in our institutions, and the willingness on the part of the American people to uphold the obligations under our Constitution, both as citizens, towards how we look at our government. So again, I think that we've got a great country with strong pillars of democracy, and I think this transition will go just fine.
And assuming we do have that transition, it goes just fine, as you say. What are the prospects for a Biden administration to be able to work with Congress and particularly work across the aisle? At this point, is the rivalry so bitter that we can't get things done, particularly if, as seems quite possible, the Senate remains in Republican hands?
David, the first point you make is, I think, a significant one, and that is these two runoff elections in Georgia, unusual as they are going to be dispositive as to the direction that we're going to see Washington head. In 9 out of 10 of these types of situations in Georgia, the Republican Party has prevailed. So my assumption going forward is that we do maintain those two Senate seats. The Republicans maintain majority in the Senate. Mitch McConnell is the Senate leader that will have a lot of influence over the direction of certainly the cabinet picks, and the confirmation process certainly lies in the hands of the Republicans. So that right off the bat is going to cause some tension with Joe Biden and his progressive wing of the Democratic Party, and how he navigates that will be instructive. But I think overall, if you look at the situation, here you've got a president, the first time in 32 years, a president has been elected and does not control Congress. In addition to that, you've got a very closely divided House and Senate. And the surprise here has been the House, not necessarily the Senate. I think most people were expecting there to be a close call in the Senate. But the real surprise in the election a month ago was the down ballot success of my party. And so with Nancy Pelosi facing such a slim majority, and David, I was in Congress after the midterms in the Bush administration, where we had maybe a 4 or 5 vote margin in the House as Republicans. Very, very difficult to govern with that. And there are going to be interesting and creative coalitions that spring up, maybe even across the aisle, that will stand in the way of Nancy Pelosi being able to deliver legislation out of the House. You couple that with the fact that Mitch McConnell has got a very slim majority in the Senate, it will be very difficult for anything legislatively to happen. Many people say that Joe Biden is a veteran of D.C. and that he knows how to work. He's got a relationship with Mitch McConnell and others. He does, and I worked with him for many years. He is one of those individuals who will try and produce consensus. The fact is, where you got to look to see where the political incentives are, and that's an unknown. And I think for the first 6 months, we'll have to watch to see, are the incentives going to stay in that the Republicans, 21, 22 of which are going to be up for re-election in less than 2 years, is the incentive such that these individuals in the Senate and the House are looking more towards the intra-party primary process, making them very risk averse to go reach across the aisle and try and drive towards resolution on any issue. I also then want to raise that point about President Trump still being around. If President Trump does say, hey, I'm going to run again,
Right.
How is it that a Republican sitting on Capitol Hill in office is going to help Biden have any victories and then take the wrath on Twitter or wherever Trump may choose to express that wrath?
It's going to
So
continue
all
to
these
be.
are unanswered questions we'll have to watch.
Yeah, it's going to continue to be very, very interesting to watch. Eric Cantor, Moelis and Company Vice Chairman and former Republican House Majority Leader, is going to be staying with us to talk about the business side of his life. But in the meantime, for Bloomberg First Word News, we're going to go to Mark Crumpton.
David, thank you. Joe Biden will be one formal step closer to the presidency today. It's the deadline for states to certify their slates of electors to the Electoral College. They will lock in the names of the people who will formally vote to make Mr. Biden the president. All of the states where President Trump is contesting the results have already certified their returns. Progress is being reported at the Brexit trade talks. The UK says it will drop controversial clauses that would rip up parts of the Brexit divorce agreement, bringing to an end a dispute that threatened to derail negotiations on a future trade deal. The British Prime Minister Boris Johnson said he still wants and hopes for a trade deal, but warned the time may be coming to recognize that the negotiations have failed. India is facing a widening budget deficit. Experts say it could reach 8% as the country enters an unprecedented recession. The country's finance minister tells Bloomberg she has to look at the big picture and can't focus solely on that number.
For the present, I'm not going to allow the fiscal deficit number to worry me because there is a need and a clear need for me to spend the money. I need to spend money to boost the economy, give the demand that requires the necessary push. And therefore today, as of now, and for this fiscal, I shall not worry about the fiscal number, deficit number that is.
And India's finance minister says she will push state firms to boost their spending. Last month, India's Prime Minister Narendra Modi expanded a support package to rescue companies and save jobs amid the coronavirus pandemic. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg.
Thanks very much, Mark. Coming up, we'll have more with Eric Cantor, Moelis & Company Vice Chairman, on the future of M&A and investing in the time of the pandemic. That's next. This is Balance of Power on Bloomberg Television and Radio. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Investors have had a roller coaster ride in 2020, as have workers and as have business executives. Eric Cantor, Vice Chairman of Moelis & Company, has remained with us for his view on where we are and where we're going. So thanks so much for staying with us here. When we talked over the summer, you said there was a fair amount of deal-making going on. It tended to be specifically in the areas that were sort of COVID-proof or COVID-resistant, things like tech and things like healthcare, things like that. What are you seeing today as you talk to CEOs, as you do deals? What are you seeing?
David, there's no question that we've sort of continued the trend which you and I spoke about in midsummer. I mean, we have seen a dramatic resurgence of M&A globally, and it's been across sectors. It is, in our view, it's been dominated by what we're calling the power middle. You know, these are the mid-market companies, the $700-800 million to $4 or $5 billion companies. Things are just very active. Obviously, there's a lot of activity amongst the sponsors, the private equity community, and really the breadth of participation has been, as you suggest, beyond just the COVID winners, beyond just the digital and the tech arena. We're seeing it in the chemical arena. We're seeing it in the energy utility arena. We're seeing it in TMT. So it is broad participation. And I think the striking thing about what we're seeing is the timing has been a huge factor in terms of the process. And what we're seeing is deals get to exclusivity a lot faster than what was otherwise the case. And a lot of it is sort of brought about by the digital infusion of communications and the way people are interacting right now. And I also think you can attribute some of the resurgence back to the cost of capital. And the cost of capital is extremely low. We saw the Federal Reserve step in immediately after the pandemic really hit. That effect has continued to benefit, I think, some of this activity. We are seeing a shift from stock back to cash because of this in many of the deals that we're involved with. And on the upside for investors and certainly for our clients, what we're seeing is valuations continue to go up. And valuations that we're seeing are even exceeding those from pre-COVID level. So all of this is sort of, it's very interesting given the fact that we are in this unprecedented 100-year pandemic. And I don't say this lightly, but I do think that for many, times seem to be very promising as people are looking beyond the pandemic. But there is a reality here, and we talked about it in the prior segment, that there are many small businesses that are really suffering. And I do think that the sort of aftermath of all this may be continued sort of collapse in certain sectors and the ability to go and restructure to try and allow folks to get back on their feet.
Do you see any frothiness? I mean, as you say, the cost of capital is approaching zero as a practical matter. That's really great if you own an asset. If you want to buy an asset, is there any sticker shock?
There's no question valuations, and when I speak to my partners at Moelis and Company who've been in the markets a lot longer than I have in these sectors that are surging, they do say, look, things are definitely very competitive in these deals out there. I think a lot of that has to do with the supply of capital, the reduced cost of capital that's fueling the fact that money's got to go somewhere. And there's plenty of potential, I think, that people see beyond just this pandemic. You indicated earlier in the economy the fact that vaccines, are here. And I do think that light is going to be at the end of the tunnel. Let's hope that we can minimize the actual human casualty and focus on the fact that we can see an economy growing again. And hopefully the policymakers in Washington will be able to wrestle with this notion of getting some of those who have been laid off from work back into the workforce. And I do think that that's going to be a big challenge given the transformation that this pandemic has brought about economically.
And finally, Eric, are you picking up on any concern in the C-suite about what might happen with regulation or with taxation in a Biden administration?
With David, I think that's spot on. And a lot of our conversations with our client have to do with the fact of what to expect in this next Congress. Clearly, there's been a sigh of relief on the taxation issue. Again, assuming the Republicans maintain control of the Senate, we'll see, I think, for the rest of the 2 years, no significant changes in taxes when most people would expect them to go up. But there will be some regulatory actions undertaken by the Biden administration immediately, very analogous to those moves made by the Trump administration in 2017, the Obama administration in 2009, which basically will undo the prior administration's regulations. And we'll see a real shift leftward in terms of things like the environment, the labor laws, financial institution oversight, and the rest.
Very briefly, do you have hopes for that unicorn we've been searching for, which is, of course, infrastructure?
Well, I would hope that we could probably have some effort to try and promote more public-private partnerships because there's so much capital on the sidelines waiting to invest in some of the infrastructure that's needed just so desperately across our country. Again, I'll have to see whether there's going to be some agreement. Real question there is whether the Congress will reinstate earmarks. If the Congress reinstates earmarks, I think that the potential for an infrastructure bill will go up pretty dramatically.
Are you in favor of earmarks?
Listen, I was very against earmarks when I was whip and I was leader because I saw that the incentive for individuals to vote for legislation that they may not otherwise want to vote for became somewhat distorted.
Right.
As well, that people with more influence in Congress who've been there longer, who are in leadership positions, have the ability to direct taxpayer money to their pet causes. And I don't think that's a healthy incentive system in Congress.
Eric Cantor, it's always such a joy to have you with us. Thank you for your time. It's Eric Cantor. He's Moelis & Company Vice Chairman and former Republican House Majority Leader. This is Bloomberg. This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Coming up, Balance of Power continues on Bloomberg Radio. In our second hour, we'll talk to Mike Levitt. He's founder of Levitt Partners and former Utah Governor and Health and Human Services Secretary. And we'll also continue the conversation on the pandemic with Dr. William Moss, head of the International Vaccine Access Center at Johns Hopkins. This is Balance of Power on Bloomberg Television and Radio.